What's going on, guys? Brian's here. Today is Thursday, July 25th, 2024. What a day. This week has been very interesting for the S&P 500 and the NASDAQ. We pretty much got a 2 Sigma sell-off this week from here to here, and we got the bounce that was discussed yesterday. This is a relief bounce. It does not mean the bottom is in yet. We won't know until after the fact. However, this is the type of price action we were expecting. Check out yesterday's video and you guys will see what was addressed in that video regarding the SPY and the QQQ. This is one of the benefits and advantages of using the QTA scripts. Don't want to seem as if I'm just talking about the Quant Trading App levels here, as we will get into some gamma exposure levels as well as price action, but I can't help but call out the fact that these levels are prepared at the beginning of the week. We copy and paste the levels from Quant Trading App, it plots these on our charts for both TradingView and Thinkorswim, and then we can focus each day just on risk management as well as waiting for the possible scenarios to play out that we're prepared for a day, sometimes a few days in advance. So let's dissect this chart again as usual from a price action standpoint and see what we have here, what we can learn, what we can take forward in future days, and then we'll dial it down to the smaller time frame and look for clear, clean setups and rules in which you can follow. First thing I want to point out on the chart is not only did price sell off pretty much close to 2 Sigma. Now by Quant Trading App standards, the application is actually not going to log this as a 2 Sigma touch, as price did not come exactly to it. That is one of the disadvantages of having a very strict quantifiable method. It's not going to count this as a 2 Sigma sell off. However, as a human, we can see that there's a little room or margin for error here. Last week, Friday, we had a 2 Sigma sell off, and now this week we came pretty close to it. This is very rare to have the SPY sell off to two 2 Sigma levels back to back. The Qs already did touch their 2 Sigma levels back to back. We'll take a look at the Qs in a second. But what I want to point out is this massive spike in volume right here. This is that type of capitulation volume that we like to see. If we were to zoom out for a second here, and let's just try to take a look at just the volume. So I want to just, slide the candlesticks up. And this is the day in which we're talking about right here. This is that volume. So I'm just going to draw a line from here, just eyeballing it, lining up. So this is the top of that volume touching based on this. I'm sorry for that. It's this gray muted color. I'm not going to change the color as I want to keep this pretty concise and quick here. Well, let's ignore this spike of volume that occurs at the end of every day. Whenever you're evaluating anomalies in volume, you want to ignore the last 15-minute candle of each day, as it's usually going to be the highest volume and also the open. So right here is the open, this is the open, this is the end of the day / open, end of the day / open, end of the day, 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 end of the day. This is also the end of the day, as this was a half a day in the market, so it was close. So out of all these days that we're looking at right here, over the past few weeks, I'm using this as a gauge, this spike in volume was the highest 15-minute candle volume out of all these days that occurred during the regular trading hours and not the closing candle or the opening candle. That is important. So as we zoom out, where does that occur? It occurs pretty much just as we're getting to 2 Sigma after an aggressive selling for the past 2 weeks now. This selling essentially started right here. This was our gap down and prices just continued to go down. So after all this selling, we finally get capitulation here. Somebody panicked, somebody gave up, somebody liquidated, someone was aggressive and just started buying up everything on the ask. Either way, all we know is that this volume is important and it stands out like a sore thumb, and that usually happens right around the 2 Sigma level. It's just something that repeats time and time again. On top of that, Quant Trading App has been in existence since 2021. We've been seeing this since its origins. It's why the system works. It has not changed since its origin, and we can just pay attention to price action as well as risk management. What do we get? We get our breakdown, we get our retest. Price gets a little choppy. Guess what? We also get a retest. This is the first retest of the top of the zone here. So this was our break yesterday. We had a breakdown, price sold all the way off, it bounces. What do we get? We get a retest, and then we get a rejection. Then we get a breakdown, we get another retest right here, and then we get another rejection. The chart is filled with all sorts of confluences. The only levels on this chart, by the way, are the QTA scripts. So if I just turn this off, turn this back on, that is the intraday and the weekly script on our chart. Links, by the way, for Quant Trading App is in the description down below. The reason I'm putting a little bit more of an emphasis on this is because this is a rare occurrence to see a 2 Sigma touch a couple weeks in a row. So I wanted to dedicate a little bit more time on this video to talk a little bit more about QTA than I normally would. If we jump over to the Qs, I just want you guys to see a similar situation here. This is that 2 sigma breach that I'm referring to. This is our retest. So if we zoom in, let's draw this nice and clean. We get a breakdown and then we get a retest. This is the retest of the weekly level. Price sells off. This was addressed in previous videos. We get the sell off to 2 sigma. Same thing that was covered last week regarding 480 level for the Qs. We ended up getting almost the same situation. Price broke down, retest, is sold off to 2 sigma. Then what did it do? It bounced and it retest back to this level, which is the weekly support level, before we get a rejection back down to 2 sigma. This level is on our chart from the start of the week. That means we're just sitting back and waiting for price action to tell us if we should enter and act on the trade or not. The simplest setup there is would be the break, retest, break, retest. There you go. Let's jump back to the SPY for a second here, and let's dial it down to the smaller time frame, which would be at this point, you guys know. Actually, before we go to the smaller time frame, let's take a look at our gamma exposure levels for extra confluence. Boom. What do you have right there? We have our negative gamma strike also marked out from the start of the week. We know that the negative GEX is low below 540. The market does not want to be below 540, at least for now. Let's turn off all of our studies and look at just the price action and the gamma levels. I drew this in here. This is the gap that's on the chart. So let's just take a look at the daily. We can see right here, this was mentioned on the preparation for this week. So over the weekend, a few days ago, the gap was addressed. I'm just pointing this out right now. So that's what you guys are seeing when we look at the drawings here. This is just the gap. I put a little gray area to make it a little bit easier to see. And this is just the label for it. So we know that this is the gap. So if we go back to the smaller time frame, so we know we're in a gap right here. This gap is looking to be filled. So we're in this gap. We have low negative GEX below it. Potential support right here at this gap coincides with pretty much the 2 sigma level. We have a retest right here. This is the breakdown of this high negative gamma level. Price comes down to this area of demand, bounces back up to this key strike. If you're not good at reading price action, hammer and inverted hammers are a beginner's best friend. These were the only candles that gave me confidence early in my trading when it came to trying to identify candlestick patterns. Hammers and dojis at support or resistance levels is a beginner's best friend. You can tell yourself or discipline yourself on a 15-minute time frame or a 5. 5 is fine also. If you see a hammer or an inverted hammer at any of your key levels and it is backed up with an extra layer of confluence, you will generally have yourself a trade and you know what your risk is, just above the hammer or just below the hammer. So in this case here, if you decide to short on this next candle, once price breaks down below here, your stop loss is above this. It is a nice, safe way to trade regarding assessing your risk. If you want to get a little bit more nuance, we'll take a look at the smaller time frame, which would be this one right here. And this is where we can look for even cleaner or sharper or faster entries. On the smaller time frame, we get an inverted hammer. If you see the same type of candlestick forming on multiple time frames, the 15 is a very important time frame for day traders. If you see a candlestick pattern unfolding on that time frame, and then you see a similar candlestick on a smaller time frame, that's even better. But let's talk about earlier in the day here. Market opens. It's very indecisive, very choppy, difficult to trade. It breaks down. If you sit on your hands and don't participate in that, which is something that I would encourage beginners to do, what do we get? Right around, guess what? The 10:15, 10:30 a.m. Eastern reversal that we've been talking about at this point for almost 2 weeks now. The low formed just around 10:10, 10:11 a.m. Eastern time. So about 45 minutes after the market opens. We're pretty close to 2 sigma. But even so, this is arguably still not a good time to enter the trade, as it can be seen as pretty risky. Unless you've acquired some sort of significant edge and you're really good at reading the tape and identifying when aggressive buyers are stepping in, it is not recommended for beginner traders to try to catch a falling knife, as no one knows how low price would go. You want to buy after you start seeing proven buyers showing up. And you can say these are proven buyers because now these candlesticks are starting to turn green. If you are still not sure when is a good time to enter, this is when having some sort of moving average crossover type of trigger is good for yourself. This is the 9 exponential moving average. This is your standard VWAP right here, this gray dynamic level that I have on my charts. This is that 9 EMA VWAP crossover. That can be used as a trigger for an entry with a stop below the close of the 9 exponential moving average, or it could be a stop below VWAP, or it can be a stop below the low of day. It all depends on the setup. It all depends on your risk parameters. It all depends on what type of trade you're running. Are you trading futures? Are you running a complex spread? Are you just buying a call option? Are you buying a put? What's your risk tolerance? All those are questions that are dependent on the individual. An experienced trader may not need to wait for that crossover. That is just adding extra confirmation. Once price reclaims these Quant Trading App levels here, this is generally going to be a good sign. Price reclaims VWAP. It pushes right past the moving average. We close above VWAP. We have now reclaimed this level. You can use any of these indications as an idea to start building a long position. Once we get the crossover, you can add to the position and then set a trailing stop as price continues to head up. QTA members know this area will lead to some sort of choppy price action. Look at how congested this area is. We have the intraday zone right here. We have the 2-day VWAP. We have the weekly level right here. That is enough of a reason to just take this as a nice winning trade right here. Price ultimately did end up going higher, but this is not the type of move that you can be scared or concerned or worried about that you missed. This is the winning trade right here. This is the clean setup without having to be too worried with a stop loss below said amounts. If we're talking about the potential, the possibilities from a risk to reward standpoint, if you're entering anywhere around here and your stop loss is below here, let's make this, this is usually how I used to like to demonstrate risk to reward. I'll just make it a very strong color like orange, set the transparency there. So boom, if that is your stop loss, let's duplicate that. So this is a 1-to-1. So if you're entering here, you're risking 1 to make 1. But if we were to duplicate this again, let's see how high this goes. This is now a 2-to-1. Let's then duplicate this again. Now we have a 3-to-1. So this already, the potential of this trade already meets excellent criteria. And this is if you're using the stop loss all the way back at the low of the day. So this is entering here. This is you risking 1 to make 1, 2, $3. Risking $1 to make $3. This is an excellent risk to reward setup, giving the trade plenty of room to play out. If we want to glance at later in the day, what are the opportunities there were? We already addressed this short setup. We'll take a look at Confluences in a bit, as there's plenty of Confluences I'm showcasing in these videos time and time again till I drill it in you guys' head or till you're sick of hearing me saying it and it just ends up becoming part of what you eat, sleep, and breathe, and it's in your subconscious. Look at the Confluences down here. Price is now selling, 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 selling. There's all sorts of patterns in these smaller time frames, but I'm not going to call out every single one. I'm just calling out what I store or log in my playbook as an A+ setup. I like this area of congestion here. Price is now back below the 2-day anchored VWAP. Price is now back below the Quant Trading App zone right here. Price is already below the 9 EMA. Price now breaks back below the buy zone. The only thing below it is VWAP. So what do we have? We had a pattern that's forming like this. This is a smaller bear flag. Price breaks right here. Not necessarily A+ because we have VWAP right here. So there's not much room. Price could continue to be choppy in this area. But if you are an aggressive short, this is a reason to get short right in here. Get a little bit of a momentum move to the downside. Close out the trade the moment you see a spike in volume. You see an indecisive candle. You see something like a hammer candle. You see something like a doji. Any of those are your reasons to get out. If you're a trend-based style type of trader, you close out the trade on the first breach of your EMA after seeing signs of slowing down of your trend. In this case here, we are seeing signs of capitulation. We're seeing indecisive candles forming, So you decide to close right here as the trend may reverse. In this case here, we see the trend did reverse. Where do we come right back up to? This area of congestion. This is not new. Since 2021, this is exactly how Quant Trading App was built. This is the origins of it, and it has been working exactly the same. Break and retest around these key levels that are mapped out from the start of the week. When there's confluence with the intraday levels, it just adds extra confirmation to take the trade. We're just sitting back and waiting for price action to show itself. I'm adding more context for you guys with extra indicators for some of you that don't use Quant Trading App, or for some of you that like EMAs, for some of you that like VWAP. You guys can see when these things line up in the same areas. And now I want to highlight and start getting you guys to train your eyes to look for these type of wicks at these significant areas. Paying attention to volume. This is how you add context to a chart. With experience, all of this becomes very natural to you. Speaking of Confluences, let's zoom out now and let's take a look. What do we have right here? We have the SPY hits the N3 strike, so the retracement, that is the same level right here. This is the first retracement to the top of the Quant Trading App zone. What do we have right here? This is a weekly POC. What do we have right here? The VIX is at support. What do we have right here? The ADD is at resistance. All these things lining up at the same time is screaming at you that, hey, here is a trade right here. Blink, blink, blink. It's flashing lights telling you all these things are matching up. I don't even have to zoom into any of these charts. I can just glance over at this. If I were to zoom in, this is what we can see right here. ADD meeting a level that it usually reverses at. Resistance. What do we have right here? The VIX at QTA support. VIX at support here. Same way VIX was at support here. Confluence. It's lining up. And that's what you want to be able to spot as a trader. If we jump over to the Qs, same thing. Resistance. Resistance. The chart is screaming at us. We turn on our studies. Similar candle right there. Let's make this large. You guys see that right there? Inverted hammer. Not a clean textbook standards because it does have a little bit of a wick here, but this is what's more important. See this wick right here? It's a long wick right at a significant strike, just as the trend has slowed down with layers of confluence. What happened the previous day at this level? Price rejected. Is this current trend slowing down? Yes, it is. Look at how these candles are getting smaller and smaller at this level. Look at the rejection here, a reversal. Guys, I really hope this is starting to sink in. This is the Qs on our 3-minute time frame. Here is our cross right here. This is not as great because price had not reclaimed the zone. If price was above the zone here, this would be a little bit safer because for all you know, price could have been above here. You enter the trade and it only bounces here and then it ends up rolling over. So it's preferred, at least for me, I'm very stingy a lot of the times on when I'm going to take the trade. If I could limit myself to just 1 to 2 trades, sometimes 0 trades a day, 1 trade, I'm generally happy enough. If it's an A+ setup or it makes me happy, get in, get out. If I'm looking for a day trade and a scalp, obviously complex options orders are different, and at this point you guys would have seen a lot of my videos to know swing trades are different. You can layer sometimes 6 or 5 different SPX complex orders staggered across multiple expirations. Now we're just limiting the videos to just day trades, just one setup. We're looking for in, out. We know what our risk is, we know what our expectations are. Did it work? Did it not? Move on to later in the day, see if there's a good opportunity. As a bonus, we'll just end this taking a look at some gamma exposures. This was our gamma exposure at the start of the day, but I think I actually want to focus on the QTA SPX data trade engine here. So we have the feed of this. I'm going to press play and we will see. So each of these are in 5-minute intervals. Market sells off, and what do? We hit our power strike, which is also the strike of the highest put volume for the day. It also is the expected move of the day. At market open, the expected move was about 33 points, which is above average. The market at this point had already sold off past 30 something points. Let me just rewind here. So we're already down just about 33 points on the day. That's what this level is telling us. This is our -1 expected move from the open. This is our highest put volume at this time. This is the stamp in time. This is captured in QTA's Discord channel and then published every 5 minutes. It's running on the clock on this feed. Our absolute gamma strike is up here, but you guys see how the power strike is latched on to a significant strike right here. Price action sells off to it as it does the expected move so far. This is an extra confluence to maybe expect price to stall out around here or reverse. This coincides with other setups that we have on the SPY and the Qs. So as we continue to play this out, what do we get? We get a bounce. It should not be a surprise. Price bounces right back up at this point to the absolute gamma / neutral strike at this point. It also hits this right here, which is the current expected move for this 15-minute cycle right here. So for this 15 minutes, this is our expected move. The market ended up doing it. This is not bad for a quick scalp or a quick bounce right here within 15 minutes from 400 to 420, 425. That is a 20 to 25 point scalp in 15 minutes. That is a beautiful trade. So for an aggressive scalper or an aggressive trader that was not waiting for that 9 EMA VWAP crossover that I pointed out on the SPY, you may have already entered because you're looking at the QTA data feed. You're out of the trade here, under 30 minutes, done for the day. Excellent setup built upon the context of everything. So price now goes way past the expected move to the upside here, the 1 Sigma close. So we went from this low to this high. This is volatility. This is the market making really big moves in both direction, just letting it play out just to see. At this point, this starts looking pretty chaotic. We're around the absolute gamma strike, but the absolute gamma strike drops down to here. This just looks chaotic. I don't really know, if this is pretty helpful. When things get this crazy, this is not really, I don't think, going to help anyone. This is too much going on here. It's more so about earlier in the day here, in my opinion. As the developer of this, I can't say that this is that helpful later in the day on a day such as this. Is generally not this crazy. However, we can see the power strike is adding as confluences for setups later in the day, as here's our rejection, similar to the same time frame in which we had the confluence on the SPY as that retest, and then it sold off. We bounced right back at the neutral strike, which happened to be where the absolute gamma came down to. Then we bounced right back up to the power strike, as the power strike was latched on to another key strike, and then we end up selling off right down to the negative 1 Sigma close. I can't say again this would have been that helpful unless you were really locked into this at the time. But for the most part, if you're glancing at this as extra confirmation for what you see already on your SPY, this could have helped in aiding some of your late day scalping decisions. I'm more at this point in the morning, just try to take my trade and then get out, wherever I see fit. I do have a swing trade running on, small one here just for tomorrow. Unfortunately, I opened it a little bit early. I told myself open it as soon as the market closes, but I got a little impatient as I didn't want to sit there until the market closed. I do wish I did, because I opened this trade, I think the SPX was somewhere around here, and then immediately sold off to somewhere around here. So immediately the trade, I think at one point I was down about $3, so $300 on the trade. Just a 1 DTE broken wing butterfly, just thinking I saw a lot of gamma exposure around the 425 strike for tomorrow. I didn't really want any upside risk in case we gap up. Would be great if we end up pinning here. Obviously, I don't want another 4-digit loss for a day this week, as I had one of those as it was shared on, I believe it was Tuesday's video. But just showcasing a small swing trade here I have for tomorrow, just based off the fact that I saw a lot of gamma exposure and it's Friday, so maybe implied volatility might come down. However, we still have a lot of earnings on the calendar for next week, so maybe it stays elevated. I don't know what's going to happen, but for now, I do know that there's a lot of negative gamma still for the week. There is a decent concentration around 425. Was contemplating targeting something out the money for 550 for tomorrow, but I didn't really want to go that far out of the money, as I didn't really think the market had enough momentum in it after the rejection that I saw here later in the afternoon. This is a pretty aggressive sell-off, and I didn't have the same confidence in getting a out the money spread targeting all the way back up here. So at this point, I figured maybe we would just hover around here for tomorrow, and I took the trade. As always, guys, leave a comment down below. Let me know if you're enjoying these videos. Like it, share it if you learned something, and I'll catch you on the next one. Take care.